Hey guys, what's going on? John Fibonacci here. Welcome back to the channel. In this video, in part 5 of this free beginner series, we're going to go over order types, what a buy stop is, what a buy limit is, what a sell stop is, what a sell limit is, and we're going to talk a little bit about stop losses. All right, so with that being said, let's get right into it. So first up is the buy stop. What is that? A buy stop order is an order to purchase a security only once the price of the security reaches the specified stop price. In layman's terms, you're buying as price goes higher. So you can see with the little image here, this is as like the candlesticks would be forming, okay, or line chart, whatever. If this is price and you think it's going to continue higher, a buy stop is where if the market say is down here, okay, you put in a buy stop that is above the market. So if this is like say $3, continuing on with the last video, like I bought a stock at $5. If I bought it at $5, okay, or if it's at $5 and say this is $6 and then 7 is up here, if it's at 5, I can put in an order to buy at 6. And that sounds silly, right? Why would you buy it at a higher price? Well, that's why I don't use buy stops, okay? Because I would rather buy low versus buying on the way up. But it is, you know, something that is available for traders to do. You can put buy stops in. And buy stops and sell stops are going to be very, very important when we get to the point, or when you get to the point in your trading journey career of when you understand market manipulation. That's one of the best things that I ever learned. And we won't get into that in this video, but this is a huge part of it. So you have to absolutely understand what this is. Okay. Buy stops, you're buying the market as it is going higher. So the inverse of that is a sell stop. All right. So a sell stop is shorting the market as it's going lower. So yes, you can make money, you can profit from a down market. A lot of beginners don't understand that. It was kind of weird to understand at first, even for myself and for a lot of traders. It's weird to understand, where if the market's going down and then, you know, there's a retracement here and then it continues going lower, you can put in a sell stop, right? Say the market's here and you want to sell it as it's going lower, you can do that. And then you can make money. If it's a sell stop, you can short it on the way lower, and if the market continues lower, you can profit from that. Okay, so it's the opposite of a buy stop. Buy stop, you're buying on the way up. Sell stop, you're shorting on the way down. Next up is a buy limit. A buy limit is a limit order to buy at a specified price. In layman's terms, you're buying as price goes lower. So if the market is currently, say, right here, and there's a reason I put kind of I turned down the opacity as if like this has not happened yet. So this is your anticipation. Say you think the market is going to trade lower to this specific price. Let's just say this is at $6. I want to buy that stock at $5. So I can put in a buy limit at $5. So if the market goes from 6 and then maybe to like 550 and then down to 5, okay, if it hits my buy limit or even goes like 1 tick, 1 point, or 1 pip below it, I'll be able to get filled most likely at that buy limit. Okay, in anticipation that I think the market will trade higher. Okay, so that's what a buy limit is. You're putting in a buy order that is below the current market value. Now, sell limit is the inverse of that. A sell limit is a limit order to sell at a specified price. So if in this example, I'm pretty much like, if I want to short, okay, it's the opposite of the last one. If it's going up and it retraces, if I think it's going to go up to this specific level, and I think if it hits that level, the market's going to trade lower, so I want to short that market, I can put in a sell limit. I can put in an order to short the market at a level that is above current price. So if this is at 5 and I think it's going to go to 6 and I'll short it at 6, then that's what I'll do. You know, might go up to 650 and then, you know, lower. So that's kind of like drawdown here, but I'm sure you understand what I'm trying to portray here. If we anticipate lower pricing, we can short the market as it goes up. And it's not just here too. You know, if the market's lower here, you could put a sell limit right here and the market could trade up to your sell limit, get you in, and then the market can go lower. Okay. And there's advanced stuff like that. There's many ways to enter a market. But again, this is a beginner, like basic series. So this is what that is. All right. Buy limit. And now you have this sell limit. All right. Stop loss. Very, very important. There are two types of stop loss orders. One is to protect long positions, and you protect a long position with a sell stop, and one to limit losses on short positions as a buy stop order. Now I know that sounds confusing right off the rip. Oh my God, what is this? Sounds crazy. I don't get that just yet. Help me understand. Okay. So in this example, if I want to long the market, right here, say the market comes down and I long this particular market, what I'm going to do is place a stop loss, let's say for example at this low. So this would be a sell stop, okay, because that order would sell it as it's going lower. So this would be a sell stop. Okay, there would be a sell limit up here. If I'm buying here and I want to sell it as it goes up, this would be a sell limit. Okay, sell stop is below the market and a sell limit is above the market. Okay, and that sell limit is going to be the take profit. I'm either going to exit right as it's going higher, or if I'm wrong, if I bought it and the market goes lower, that sell stop will trigger, right? That's my stop loss, and I will exit the market at a loss. So I'm either going to exit for a profit or I'm going to exit at a loss. Okay, so that's what that means. If I'm long, there's going to be a sell stop at the low, which is a stop loss. There's going to be a sell limit up here as a take profit order, so I can exit with a profit. Okay, so hopefully that makes sense. If you got to rewatch the video or rewind this part, do it. It's okay. All right, now the inverse of the last slide is here. All right, if the market comes up and I short this market, right, I'm selling the market, I'm shorting this market, I will have a buy stop up here. That's going to be my stop loss, a buy stop, because I will buy the market as it goes up, and that will exit my short. Okay, if I'm short, if this is a buy stop up here, down here will be a buy limit, meaning if I'm short, the market goes lower, I want to buy it as it's going lower. Okay, and that will profit on my short since I shorted this. If it goes down to here and I buy it back, I'll profit that difference. Okay, and so that will pretty much cover what those orders are. Okay, so with that being said, thank you guys for being here. Thanks for watching. I appreciate you. Drop a like if you got some value. I'd greatly appreciate that, and make sure that you are subscribed to the channel as well. All right, so with that, I will see you in the next one.